What is good, Lottery Stocks fan? Welcome back to the channel. Welcome to the channel if you're new. GameStop is down 22%. Everybody who is watching this video has probably lost a shit ton of money, including myself, at least as of right now. I'm going to break down the actual convertible note offering, what it means going forward, because a lot of people are spreading misinformation and they're actually spreading a bearish narrative. And then we're also going to cover why everyone is calling for a bottom today between 1 and 4 p.m. Eastern Standard if you don't already know why. So without further ado, like the video if you want, subscribe to the channel if you want, watch until the end for your benefit. So what happened? Basically, GameStop had a annual shareholder meeting today. Yesterday, it announced a convertible note offering for $1.75 billion. On top of that, optionality for $250 million. Let's break it down. GameStop is raising $1.75 billion by selling convertible senior notes, which is a type of debt that can turn into stock later. There's also an option to sell $250 million more if demand is high. There are no interests. These are 0% notes, just like the last one. So GameStop does not pay interest, which is just complete cheap debt. It's basically free debt. Due date, the debt matures in June 2032, and the buyers can later turn this debt into GameStop shares at a set conversion price to be finalized. To be finalized between 1 and 4 p.m. today. That is why it correlates with people yelling that there's going to be a bottom between them. Early conversions allowed only if the stock trades significantly above the conversion price, so 130% or more for 20 out of 30 trading days or other trigger events early 2030. After January 1st, 2030, holders can convert at any time until maturity, June 2032. Conversion rate may be adjusted for corporate action, stock splits, dividends, etc. And GameStop can redeem the notes early if they want from April 6, 2028, if the stock trades consistently above a set threshold, which is that conversion price that we just talked about. Now, holders have a put option to force repurchase on April 3rd, 2028 at par. So in simple terms, on April 3rd, 2028, investors can say to GameStop, hey, buy these notes back from us at $1,000 each. GameStop now has to pay them without asking any questions. Now, this is where it gets interesting for today about the bottom between 1 and 4 p.m. GameStop hasn't fixed the conversion rate yet. So we have the convertible note offering with a 0% interest, but what is the conversion rate? Because we know what the recent one it was. It was above about $38, which was a nice premium. And coincidentally, last time GameStop pushed up to 37 or so, and we couldn't break above that threshold. Now, here is how the conversion rate gets determined. It is based on VWAP, which is volume weighted average price of the Class A common stock between 1 and 4 p.m. EDT on the day of the pricing. So today, in March, GameStop issued similar 0% convertible notes due 2030 with 33.497 shares per $1,000 note, which set an initial conversion price of $29.85 a share, which was a 37.5% premium over that day's VWAP. Okay, GameStop did this right here. This was the last note offering, March 27th. And the stock, as you can see, got absolutely obliterated from right here down to the lowest, down about 30%. From the peak recently, we are already down about 38%, but from this initial drop off, we are down almost 30%, which I believe the new floor is now about to be 2150. That is my guess. If we do drop lower between 1 and 4 p.m., 2150 is likely the bottom. People are calling for 19, so on and so on and so on. Well, lottery sucks. What does this mean going forward? We get the convertible note offering. Yes, let's dig into it and go into more detail. Here is what gets interesting and why the stock is down 23%. Guys, pay attention here because it's not just like, oh, this is complete bad news. Ryan Cohen effed us over. Now, somebody, shout out Jason in Discord, he's probably watching this, made a very good point. As pissed off as I am, I don't think this is how it ends. This is what he said, and I completely agree. As pissed off as I was yesterday, as pissed off as I am today, this is not how it ends. Now, $1.75 billion in notes converting at roughly 40 shares per 1,000 means around 70 million shares need to be shorted to hedge fully. Now, this is a little bit of a ballpark, but should be pretty close on the number. Now, given GameStop's float is roughly 90 to 100 million shares, shorting 70 million shares is a huge chunk, which is around 70 to 80% of the available shares. What am I talking about here? When these convertible notes get issued, the buyers of the notes do something which is called hedging. And what they have to do is short the stock. And this is what happened last time. Last time the convertible notes were issued, which this time is larger. This is a larger offering. There was about 35 million plus short volume. And there's a couple reasons for it. So this kind of short selling can push the stock price down sharply, which is what we're seeing, especially around the pricing and issuance of the date, which the pricing is about to come in now between the market close. Now, holders need to short about 70 million shares to fully hedge 1.75 billion in notes. Why? Why do they have to do that? Hedge funds and institutional investors don't want to risk the stock price moving against their convertible notes. So they aggressively short to lock in their equity risk. The convertible note structure gives them downside protection, debt floor, plus potential equity gains. Now they hedge with shorting to neutralize risk, which ironically puts downward pressure on the stock that they want to benefit from. It's very complicated, but if you haven't seen, this is a very, very in-depth, mind-boggling breakdown that I have posted on the recent convertible notes and how it's a huge trap for short sellers. Okay, go watch this. It's was posted on May 3rd. It's titled "It Just Clicked." Ryan Cohen is a genius. Forced shorts trap endgame. We go on. The convertible note trap in a nutshell is note holders hedged by shorting the stock to protect against conversion risk, which floods the market with sells, pushing the price down, which is what we're currently in. This is the first phase that we're seeing. Now, lower stock price means cheaper conversion price, so more shares get issued. What does that mean? That means today they're trying to drop the VWAP. That way the premium is a little bit lower on the conversion price because the conversion price is going to be based off the VWAP today. Now, lower stock price means cheaper conversion price, so more shares get issued, increasing dilution and pushing the price down even more, which is a vicious cycle. Now, if retail traders buy aggressively or institutions buy aggressively, they can trigger a short squeeze, forcing note holders to buy back shares at higher prices, causing big losses on their shorts. Now, this is where the trap comes in for a possible short squeeze. Note holders are facing this weird dilemma, right? They convert too early and they lose the upside potential, or they convert too late and they face huge losses on shorted shares as price rises. So liquidity and borrow costs can also spike, making hedging expensive or impossible, trapping note holders further. And in short, the trap isn't that they can't cover or wait, it's that doing so involves very risky, costly decisions with no easy, perfect move. Now, on top of that, why would a note holder even want to do this, right? You wonder how this is such a bad thing, and it's because it's not. I do believe that it's possible GameStop's price could have tanked right here, even without this capital raise, but this just made it more aggressive. I think Ryan Cohen has figured out some sort of infinite cash loop. It's possible. I think there is some way around this, but I think he's figuring out a very devious master plan against short sellers. Now, just from a technical standpoint, we gap down. We have a huge gap fill up to 28.50 and then another gap fill up to 29.70. So we have two huge gap fills to the upside. We're below the 200 EMA. We are extremely oversold. We are at the very bottom of the RSI, all the way at the 30. And just about a week ago, we are just overbought all the way at 80. So we are in definitionally, right? Volatility. We're in extreme volatility. We're down about 23%. These are huge price swings. From the last convertible note offering, the stock ran 70%. Now we're down 30%. This is all within 2 months, okay? I also want to note this is very weird because if you don't know my very cluttered charts that track cycles and everything like that, I've given you a little bit cleaner charts recently, but we were in the setup where GameStop was actually in a peak squeeze scenario, right? Where we were actually in this peak based off of the January run-up. And instead it played out inverse and we dumped to the downside. So what do I think is a possible scenario here? Well, this is, if this isn't it, I don't know what is. This is probably the crash, right? This is probably the crash before the cheers. What is the cheers? Well, is it a squeeze? Well, possibly. I think it's very likely that that this isn't over. No matter how beaten down you feel and how beaten down your account is, I'm at this point it might be bad news for you because you just don't want to hear it, but I don't think this is how it ends personally. Um as far as other plays go, you also have to understand AMC's down 5%. Chewy recently got hammered. Now it is green on the day, and this is all correlating, right? But it recently got hammered 19%. Unity as well. And you can go look down the list. Unity as well, down 16%. You can look down the list of other squeeze plays. FFAI, BlackBerry probably gotten beat down, right? Plenty of plays got some sort of retracement recently. And they're not, all of these basket stocks, these short squeeze plays, have gotten a hard sell off. GameStop's was just overly sold because they damn near sold the entire float to hedge. And I believe within the T plus 35 from today, we're going to see a lot of mass covering. Now, you do have to remember a couple of things here. Solely based off of speculation, we saw between Wednesday, June 11th, and then Friday, June 13th, we need a lot of covering on fails to deliver that we've seen with specific ETFs, and the same thing goes for AMC. Where are we now? Well, we have about a day left. This is assuming that none of these shares were covered on the run-up from May 22nd to the 28th on both of these plays. Again, that is assuming that. Now that we have another T plus 35 situation here, you're probably going to see large moves higher prior to, which is good, the July 18th expiration. July 17th would be the mandatory cover date from all of these shares being shorted. But at this point, I'm kind of rambling on with pure speculation. All I can tell you is when we get up to these prices, they slam the stock anyway. And this time, it just so happens, as well as this time back here, every time we get to this floor price at 29 bucks where they don't want it over, at this point, we are raising unlimited cash. I mean, even when we didn't raise this cash, we got slammed back here. We got slammed right here, and right here, and right here. And right here, we finally said, all right, let's raise a shit ton of money. And we came right back down to it. Let's just raise a shit ton of money again. And what's so interesting is that institutions are actually buying these. I don't, if it was super bearish, why would they even buy these at a 0% interest rate? There's a lot of fishy things that is going on, and it's very complicated. What I can tell you going forward is between now and 4 p.m. Eastern Standard when the market closed, they're trying to manipulate VWAP to bring the premium price as low as possible, the premium conversion price as low as possible. Ultimately, institutions, big players, they have been loading up on GameStop, and they are the ones buying these notes, and they expect the stock to go higher. Given the date is very, very far out, they expect the stock to go higher. And at this point, GameStop, a company that you own, is going to have above, right? You got to listen to this, right? GameStop is going to have above $8 billion in cash and assets. The market cap is at $9.85 billion. If they sell this thing even further at any point, the entire float can be purchased by the company. How low can this actually go? Well, you're looking at a price that probably would not go lower, in my personal opinion. Nothing I say is financial advice. I'm not a financial advisor, but you are in the depths of the pit. I mean, this company has almost enough cash on hand to buy back the entire share float on the public exchange. I'm just going to leave it right there. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Lottery stocks, where do we go from here? I can't tell you what to buy, hold, or sell, or what to do. But Discord does know that I got slammed on these calls. This necessarily best for shareholders, bad for call holders because we got cooked on calls. I'm still holding my July 18th. In fact, I actually bought some more today. If you want to know the exact position, get in the Discord. It's the top link in the description. Make sure to go watch this. Ryan Cohen's a genius. The Prisoner's Dilemma. It breaks this down much more clearly for you guys and a longer, more in-depth, detailed breakdown as to why this is actually good for us and good for GameStop as a company. Join the Discord server. Link is in the description. Also, what happened with the shareholder meeting, Lottery Sucks? Well, I forgot to cover that. Really, not much. Not much happened with the shareholder meeting. Nothing great was announced. And why was that? Well, it's simple, right? If they announced any positive news during the meeting, it would have ruined the VWAP window, which they are trying to control and short the shit out of. At this point, I I think the next step is for Roaring Kitty to come back because I would assume this is a crash. We had the Memorial Day flag. Now we're at the crash. And I assume next up is the cheers. Um, but we can only assume, right? That is it. Check the links in the description. I love you all. God bless. Lottery Stocks out.